Are you saying it's more realistic that we'll see 4% and the Chinese will come out with a report or their own numbers that are closer to the 7.5% that's expected?
Yes. Governments will always publish the statistics that they wish to show, irrespective whether that is in China or in other countries. The governments control basically the statistical offices, and so they can show whatever they want. It's as Stalin said, it's not important who votes, but who counts the votes.
Well,
and the government counts the statistics.
Yeah, and if you're China, you get some muscle there to count what you want. But at the end of the day, you know, investors, they have a tendency to see through these things. Marc Faber, do you believe investors are seeing through this? Have they discounted China enough in your view?
Look, the fact is simply that Chinese stocks have been just about the worst performing stocks since 2006. Now, you know, analysts will dismiss that and say everything is perfect in China, but the stock market does not seem to believe everything that the government is saying about the economy. And clearly there are stress signs in the Chinese economy. In particular, as I just said, we had this huge explosion of debt. Debt as a percent of GDP has increased in the last 5 years by more than 50%. Total debt is now over 215% of GDP, and a lot of it is trade finance that is being rolled over. In addition to that, there are lots of funny deals. I mean, a friend of mine who analyzes China very carefully, Simon Hunt, he pointed out that trade finance between one state-owned enterprise and a private company has amounted to over $5 trillion by continuing to roll over the same collateral several times. There's lots of funny things that are happening in China.
I wonder...
And when the whole thing unwinds, it would be a disaster.
Well, surely they can do that kind of thing within their own borders and kind of keep a lid on it. But as you say, if there are discrepancies with their export numbers and, say, Taiwan's import numbers, or if indeed we see all of their export numbers dropping, all of their import numbers dropping, more importantly, it could portend disaster for the rest of Asia. Do you see that sort of playing through, those ripples playing through Asia this year?
Yes. I mean, I think that investors are not sufficiently aware that the Chinese economy is far more important for other emerging economies than the United States, because China is a large importer of resources, in other words, iron ore, copper, zinc, nickel, oil, and so forth. And at the same time, they are a huge exporter to commodity producers of their own manufactured goods, as well as Korean exports to commodity producers are much larger than Korean exports to the U.S. or to the EU. So if the Chinese economy slows down, commodity prices, in other words, industrial commodity prices, are likely to remain under pressure. They already come down a lot. They remain under pressure. Then the resource producers have less money. In other words, the Brazilian economy goes into recession. The Middle East does not grow as much as before. Central Asia, Africa, and so forth all have contracts. And then they buy less from China, and you have a vicious cycle on the downside.